Hello and welcome to my Trading 212 Stocks and Shares ISA portfolio update for November 2024. I did miss last month's update, so I'll cover everything that's happened in the portfolio across October as well. A lot has happened over the past 2 months, but of course the big highlight was the US presidential election, which saw Donald Trump defeat Kamala Harris. This was followed by US stocks posting their strongest week in a year, and the S&P 500 briefly breaking through 6,000 for the first time, which I'm sure everyone was happy to see those big green numbers in their portfolio, regardless of their opinions on the outcome. However, after that surge, it has been a bit wobbly in recent days and come down again a little bit, with a 1-week chart on the 18th of November showing the S&P 500 down by 1.78%. However, that being said, one stock that is continuing to fly is Tesla, with it now being up by nearly 54% on a 1-month chart. There's a lot of optimism surrounding this stock, given Elon Musk was a key backer of the Trump campaign and therefore perhaps likely to benefit from the Trump administration. There's so much more news and stocks I could go through, but this is a portfolio update, and without further ado, in this video I'll start off by going over the dividends I've received and any positions I've sold, before going through my Trading 212 Invest account and the new pie I first showed in the last update. I'll then move on to my stocks ISA portfolio. As always, I'll update on how all the positions are doing and any changes or purchases I've made. You'll know I never hide anything. I show the good, the bad, and the disasters of the portfolio. As a quick reminder, as I previously used the Invest account and this was the first year I've used this Trading 212 Stocks ISA, I qualified for the 1% ISA cashback promotion on all ISA deposits. I've deposited a total of £13,500 into my Trading 212 Stocks and Shares ISA this tax year, and that means I've received £135 in cashback. Adding my Trading 212 ISA deposits to my Invest Engine and Hargreaves Lansdown deposits does mean that I've now utilised my full 20k tax year allowance and therefore cannot contribute more to my ISA. However, I have been contributing to my Invest account instead. Before moving on with the update, remember that I'm not a financial advisor and the information in this video should not be construed as investment advice. I'm showing my own portfolio for entertainment purposes. When investing, your capital is at risk and you may get back less than what you put in. Past performance is no guarantee of future results and other fees may apply. So, looking at the dividends I've received over the past couple of months, I've received a total of 5 dividends totaling £69.13, but the bulk of this figure has just come from one of those dividends. That was the much anticipated JP Morgan Global Growth and Income quarterly dividend of £61.73 received on the 7th of October. This was a great amount to receive and was immediately reinvested straight back into the position. The next largest dividend was £6.96 from Jet2, received on the 23rd of October. I used this dividend to purchase another share of JGGI. Lastly, the other 3 dividends were very small ones from the pie in the Invest account, 25p from Apple, 18p from ASML, and a whopping 1p from Nvidia. This cash is retained within the pie and will be automatically reinvested once enough cash has accumulated to do so. In terms of what I've sold since last update, I've actually not sold anything. My plan at the moment is to slowly consolidate positions, but I do not have any set plans to sell anything anytime soon, but you never know when opportunities arise. I certainly would like to have a simplified portfolio consisting of ETFs and investment trusts for the most part, but I do like to dabble with a few individual stocks, hence why I have that pie in the Invest account and a few stocks in the ISA account. Before jumping straight into the run through of the holdings in the portfolio though, I would like to thank Trading 212 for sponsoring today's video. I've been using Trading 212 since before I started this channel, and as a happy customer and user myself, it's just so easy for me to recommend them. Trading 212 is not only a super low cost investment platform with no account fees and no commission on trades, but the platform also offers so many handy features and has incredible offerings. One particularly impressive offering is their current rate of interest on uninvested funds at a market leading rate of 5.17% AER in the Invest, Stocks ISA and Cash ISA accounts. I'm currently holding just over £8,200 in my Trading 212 Invest account and I'm receiving around £1.13p in interest every single day. And that is another great thing to mention here. Unlike most other accounts, the interest is paid out daily, so it's really motivating to receive those daily interest notifications. To receive this 5.17% AER in your Invest and Stocks ISA accounts, you do have to activate it and agree for your cash to be held in qualifying money market funds and banks, so make sure you read the terms and are happy with QMMFs. As you can see here in my breakdown, Trading 212 has placed about 61.5% of my cash in QMMFs, with the rest being split between JP Morgan, Barclays and NatWest. If you're looking to get started on the platform, Trading212 are currently offering my viewers free fractional shares worth up to £100 when you sign up through the link in the description. Alternatively, after signing up, you can go to the settings page and use the promo code TOM, TOM, to claim your free fractional shares within 10 days of opening your account. Remember, when investing, your capital is at risk and terms and conditions do apply. Turning to the Trading212 page, before going through the ISA, let's go through my invest account. Looking at a 3-month chart for the portfolio, you can see that in about mid-October, I contributed and invested a further £500 in the account. This was invested in the MSCI World Quality Top 10 pie that I'll go through shortly. You can also clearly see a bit of a jump after the result of the US election on the 6th of November, from about plus 9.5% to plus 12%, but then it has drifted back down to around that plus 9% mark. Moving on to the positions, looking at the 1-month chart for the first position in the portfolio, Bloomsbury does reveal that surprisingly the share price has ended up being almost exactly where it was a month ago. This is in despite some incredible results being released on the 24th of October. In fact, you can see that spike up to about 763p in the day following the release. I'm not really too sure why it has come all the way back down, so if anyone knows then be sure to let me know. The highlight of the interim results was that BMY are yet again upgrading full year expectations after record first half revenue and profit. They've upgraded expectations so many times recently that I've lost count, and this kind of constant positive earning surprises are always a good sign for a business in my opinion. We can see Bloomsbury reported revenue growth of 32% to 179.8 million and profit growth of 50% to 26.6 million. So some incredibly impressive numbers. You won't be surprised to hear that I have no plan of selling this stock at the moment. Scrolling down on the page, we can see that my unrealised return is plus £126.3 or 21.09%, and I've not added to my position of just short of 109 shares. Just below this is a very small position in LVMH, which is just a free fractional share that I've received, so I won't go into any detail on this one, I didn't buy it. It has dropped a fair bit since I received it in the portfolio, and I'll probably hold on to it for a little bit longer to see what happens. Okay, now to the relatively new part of the portfolio, the MSCI World Quality Top 10 pie that I created at the beginning of September, so just over 2 months into it now. As I explained in the last update, I frequently complained about the lack of a proper MSCI World Quality ETF being available for UK investors, so I created my own pie using the downloadable holdings of the Australian ETF VanEck MSCI International Quality. The Australians are lucky enough to have a proper, non-sector neutral global quality ETF that tracks the MSCI World Quality X Australia Index. Once downloaded, I just divided the weighting given to each of the top 10 stocks by the combined weighting of the top 10 and multiplied it by 100 to get the weighting of each stock for the pie. To make clear, this is not a precise art and this is just an experiment and a bit of fun. It certainly isn't optimal or 100% accurate. Looking at the holdings of the pie, we can see that the top 5 holdings consist of magnificent 7 companies, and they're all currently doing very well. In particular, Nvidia is up by over 30%, and that has just been absolutely flying in the couple months I've held it. However, in the other half of the pie, we do have some losers, especially Eli Lilly and Novo Nordisk, the pharmaceutical giants. They're down by nearly 20% each. ASML has also had a pretty poor period after that disappointing earnings recently. On the other hand, Visa has shot up a fair bit and is now the second best performing stock in the pie, which is good to see. So overall, I'm enjoying the pie so far, and although only 10 stocks, it does show the benefit of diversification, with it being up overall despite some poor performers being included. Okay, switching over to the Stocks ISA account now. Firstly, I'll look at that 3-month chart of the portfolio, and we can just see how much the market has swung recently. Back in early September, at one point the portfolio was down by £575, but just a couple of months later it is now up by nearly £800, and in the days succeeding the election, I did enjoy a period of breaking that plus £1,000 mark on the chart. Of course, as I always say though, it's worth not getting too carried away with this chart, as it only shows unrealised returns, does not include dividends or realised gains. But it's still very nice to see such a positive swing in the portfolio. If you're wondering what my total return on my Stocks ISA is this tax year, then it's really easy to work out because I've deposited $13,500. Therefore, you just have to take away $13,500 from my current portfolio balance to get that total return figure. So I am at least plus £1,250 this tax year, which I'm very happy with. Anyway, moving on to the holdings run through, you'll see that the first stock in the ISA is Bloomsbury Publishing again, which I hold in both my ISA and Invest account. I still own 150 shares here, and my return is currently plus £177 or 21.61%. Jet2 is the next stock in the portfolio, the well-known travel and leisure company. Over the past few months, it has done very well and is up by 10.37%. I currently have a return of £49.62 or plus 5.36% on my 65 shares. As I showed earlier, I also received a dividend payment from Jet2 recently as well. Next up in the portfolio is JP Morgan Global Growth and Income, ticker JGGI. On the 3-month chart, you can see that big recovery since that dip in early September. It really did not last long at all. Scrolling down, you can see I've topped up my position slightly using the dividends I've received. I did 12 shares, so I now have a total of 1,380 shares. My return for JGGI is now firmly in the green at plus 6.17% or plus £468.58. The next holding in the portfolio is SPDR MSCI USA Small Cap Value Weighted ETF with the ticker USSC. This is up by 9.46% on a 3-month chart, so it has done exceptionally well recently, with small cap seeing huge gains since the election. It has cooled off a little bit in recent days, but still well up. I still own 30 shares with an average price of around $62.48. You can really see the impact of the weakening pound here, as in my last update I had a negative FX impact of minus 4.3%, but this has now gone completely the other way to a positive FX impact of around plus 1%. I remember so many people complaining about their negative FX impacts, but this serves as a reminder just how quickly things can change and why I personally, as a long-term investor, do not really worry about the short-term swings of FX, as it really is outside of my control and in my opinion not worth worrying about. Moving on, my next position is Wise, the fintech company. This stock has done very well recently, with a 3-month chart revealing a return of plus 17.24%. This is following the release of some great half-year results on 6th of November, which revealed revenue growth of 19% and underlying profit before tax growth of 57%. Wise has benefited greatly from high interest rates, but the use of underlying profit in the report here, which removes the additional interest income above the first 1% yield, really does help us see that Wise is experiencing strong growth regardless of that interest income. This is important to see because it alleviates some concerns that Wise's numbers are just heavily reliant on high interest rates. For a full run through of these results, be sure to check out the Playing Footsie podcast. I'd highly recommend it. Looking back at my portfolio now, you can see that I'm now in the green by 12.27% or plus £275.41. This is a huge swing because in my last update in September, I was actually down by 10%. So it's great to see Wise starting to perform well here. Let's hope it continues. I may look to trim the position now because it is making up quite a large part of the portfolio for an individual stock. But I'll see, I'm not decided yet. Finally, the last position in the portfolio is YouGov, the stock that drags the whole portfolio down. I keep on thinking it's going to have a bit of a recovery, but then it just starts dropping again, with the most recent recovery being on that 11th of November here, when it nearly hit 500p, before dropping straight back down again to 439p that it is now as of recording. I need to decide whether to cut my losses on this or hold out for longer and see what happens. I'm undecided at the moment as I can see some potential, but I'm also concerned by the amount of debt they have on the balance sheet from that recent acquisition. Scrolling down, we can see my current position of 120 shares is down by £403 or minus 43.35%. Of course, I do wish that I did not bother with this position, but hindsight is a wonderful thing, and it is a reminder of the risks of investing and the importance of diversification. So that's all my positions in the portfolio, and to finish the update, I'll just quickly show the overall allocation of the portfolios and how they currently stand. Trading 212 have recently revamped the asset allocation, so we now have a heat map showing the proportion of each asset in the portfolio and its daily price changes. It's a great way to see at a glance how each position is doing day to day. And it also helps visualize the weightings and helps you decide if a position has become too big or too small in your portfolio. I really like it. And if you click that more details button underneath it, then you do get this full list on the right hand side as well. So starting off with the investor account allocation, we can see that BMY is unsurprisingly the largest position here at around 28%. It is then the 10 stocks of the MSCI World Quality Top 10 pie, followed by that free fractional share of LVMH. I'm not really tracking the weightings of this investor account, but it's still interesting to see. Switching over to the ISA account now, this one I do pay more attention to. So the largest position by far is JP Morgan Global Growth and Income at around 54%. This is intentional, with it being an investment trust that invests globally and typically contains 50 to 90 stocks, so it is well diversified. I then do have 17% of the portfolio in Ys, which as I mentioned, I do think is a bit much, so I may look to trim it soon. USSC, the small cap value ETF, is next, and I'm happy for this to have a large weighting as it is an ETF and it is well diversified, so JGGI and USSC are diversified positions. Then the remainder of the portfolio is split between BMY, Jet2 and U. I'm happy to have a fair bit allocated to individual stocks here, as my other portfolio on Invest Engine is 100% ETFs, so I do not feel I'm overly allocated to individual stocks. That being said, I would like to reduce these individual holdings a bit further soon and focus more on collective investment vehicles. We'll see how that goes, but it all depends on opportunities. I'm not just going to sell for the sake of it. I'll keep an eye on things. So that is it for this update. I continue to be happy with how the portfolio is doing overall, and it has been a couple of exciting months. It will be interesting to see how 2024 ends and if we'll have a Santa rally, or have we had enough gains for this year. Let me know your thoughts in the comments below, and if you enjoyed the video, please consider leaving a like, and I'll see you in the next one. As always, thank you for watching.